In a world that's increasingly getting defined by monetary intervention and trade conflict, the intersection of just fiscal dominance and protectionism is no longer theoretical, right? Because it's actually policy now. The US economy, which used to be really like a bastion of progression and globalism, is kind of entering this era of managed decline. I'd like to call it kind of disguised as nationalist revival, right? So the market is not fooled. In Bitcoin, more than any other asset right now, knows where the truth is, and it's definitely starting to show up first. So today I'm just trying to break down the real story behind Trump's new wave of tariffs, the Fed's quiet surrender, and why Bitcoin short term might stumble, even though there is a massive long-term opportunity if you fully grasp what's actually going on. So let's talk about the bigger picture, right? Just the end of monetary independence, I'd like to call it. The Federal Reserve's latest pivot is slowing treasury kind of a runoff from 25 billion to about 5 billion per month, in preparing the balance sheet for reallocations into US debt. Isn't just a tactical move, in my opinion. I think it's actually a capitulation, because the Fed is no longer the adult in the room here. It's I think more or less the fiscal janitor that's just mopping up after the government can't actually fund itself through organic demand for its bonds, right? So this is actually the essence of this thing we call fiscal dominance, when central banks must prioritize government solvency over price stability or employment, right? So it's not hypothetical, it's already happening. Jerome Powell's March FOMC remarks really essentially admitted as much, right? With over $36 trillion in debt and foreign demand for treasuries waning, the Fed is pretty much become the buyer of last resort. And this isn't just about balance sheets or rates. It's really about trust, and the growing lack of trust thereof in fiat systems that is now a function not through artificial demand and political coercion, right? It's something that we're seeing as we're entering this tariff period, where, layered onto the actual monetary dysfunction is these aggressive tariff policies, right, that are now codified through the Liberation Day announcements just last week. These aren't small tweaks, right? We're talking about sweeping import taxes, 10%, 25%, and even 50% on goods from dozens of countries. It's protectionism at scale, sold as patriotic industry or industrial policy, I think. And tariffs aren't they are taxes, right? And taxes hit the supply side of the economy, particularly in an era of globalized production. They're actually inflationary, right? So they raise input costs, choke supply chains, and ultimately land on the consumer's plate. Inflation driven by tariffs is not the healthy kind as well. That comes from robust demand. It's bad inflation. In fact, it's unproductive, it's regressive, and geopolitically also contagious. And Trump's team insists that these policies will revive the American industry. But even if that's partially true, right, the macro economic trade-off is severe. Slower growth, rising prices, tighter margins, and also just heightened uncertainty, right? All of that gets priced in pretty fast. And this, we're seeing Bitcoin is falling for now, right? But I think there's a simple case to argue for its astronomical rise, and not too far from here, because to critics, Bitcoin's recent slump, down nearly 10% in the wake of the tariff announcements, just proves that it's not a safe haven. That's what they would say, right? And the point to its correlation with tech stocks and its reputation as a risk-on asset, and its decline alongside equities as evidence of that the digital gold narrative is indeed flawed. But the critiques always miss the point, because Bitcoin isn't falling because it's weak. It's falling because markets are smart, right? Investors know that in the early stages of tariff wars and fiscal instability, liquidity gets squeezed, risk assets get dumped, institutions deleverage, and margin calls hit everything, including Bitcoin. And yet in the same environment, gold is up 18% year to date. Because it's the legacy safe haven, right? And you've got Bitcoin, which isn't there yet if we compare the two in terms of market cap, but it's obviously on the path there, crucially, because it's an open market trading 24/7 with deep liquidity and no circuit breakers. That just makes it the first asset to pretty much reflect fear, but it's not the weakest. So it's always ahead of most of the other markets in history. It does tell us what happens next, because when the liquidity tap is turned back on, as it inevitably is going to be under fiscal dominance, assets that are finite and independent will surge. And that's what happened to gold post the 2008 collapse. And that's what is setting up for Bitcoin right now. But we look at the tariff spillover, just 4 key crypto effects you might see. Mining costs rising, right? Tariffs on Chinese hardware, particularly these ASICs and semiconductors, are making it more expensive to operate US-based mining rigs. And that could slow domestic mining. But also lowers sell pressure as production contracts, okay? And also scarcity is always bullish. And inflation also, I mean, another thing to remember here, it breeds that hedge demand where tariff-driven inflation is already showing up in the data. If the Fed hesitates to cut rates in time or resumes QE to cushion growth, the credibility of the dollar as a long-term store of value will erode, right? That's Bitcoin's cue. We're seeing BlackRock putting out reports to their own investors, really talking about why Bitcoin is a threat to that dollar hegemony as a reserve currency. Also, just the global currency instability will definitely boost adoption, in my opinion. Trade wars weaken fiat currencies in places like Argentina or Turkey, Nigeria. This will definitely lead directly to higher crypto adoption. If the dollar weakens as its reserve status comes into question, Bitcoins and stable coins obviously will benefit. We've just heard Tether talking about moving out of the, not moving out of the US, but creating another stable coin for just the US market, etc. So I think private money in terms of stable coin issuances is going to increase. Also, there's talks of the stablecoin bill that the new administration in the US is working on. So, just volatility as well as a filter. Right now, Bitcoin is behaving more like a tech stock, right? Because that's how most institutions treat it over time. I think volatility will act as a filter there. It shakes up weak hands, reallocates that supply to long-term holders as usual, and concentrates that ownership among those who understand those fundamentals. So I think what the market is missing, I think most financial commentary is pretty much stuck on the short-term mechanics here. CPI prints, S&P levels, CME rate cut odds, but what's happening beneath the surface is something much bigger. I think central banks have lost their independence. Governments are funding themselves through monetary manipulation. Trade is being weaponized. Fiat systems are being stretched to the point of structural stress. And in that environment, Bitcoin isn't just an investment, it's an exit strategy, not because it's perfect, but because it's not printable, it's not censorable, it's not under the control of any particular entity. And I think that is something to always remember. So I think also with the strategic Bitcoin allocation, the next few months, definitely volatility is going to stay. Tariffs will spark retaliation. Inflation may re-accelerate as well. Liquidity will ebb and flow, but Bitcoin will continue to be misunderstood by analysts who expect it to behave either like gold or equities. Smart investors see what's coming. The Fed trapped by fiscal math and political pressure here, a government using tariffs to hide deeper economic fragility, and a monetary system held together by confidence and not fundamentals. In that world, Bitcoin is a bet on an utopia, a hedge against that dysfunction. And yes, it's volatile. I think in the short term, you'll still continue to see that volatility. Unlike the dollar, Bitcoin's value isn't derived from central banks' kind of promises. It's built into the code. That's what make it the most important, I think, invention of our time. So, I think fiscal dominance is the disease here. Tariffs are the symptom, and Bitcoin might just be the cure. Go hodl up, man. If you want to get started with crypto, make sure you go to decentralized.news, our main URL, and check out our list of free resources and tools. The best cryptocurrency exchange reviews, DeFi platforms, all things crypto. Check out the links to my favorite trading platforms down below. Like, share, subscribe, turn on the notifications. I'll see you guys in the next videos. Peace. Love.